The last few days has seen the oil price break out to a 7-year high, best levels since October 2014. So what next? Is this the start of a move to $100 a barrel, or actually is the market over-exaggerating the recent OPEC decision and it's time to go short? I must admit, I've been wrong-footed by oil the last couple of trades, and here we are trading. You can see it on the chart here. At the best levels, we've got to go all the way back to October 2014 for oil. And it really is clearly an incredible run since those lows in April of last year, from around $11 in the cash market to almost $80 where we are today. The move has extended that trend that's been in place since August. It did look a little bit weak the third week of August, but it's clawed back the losses made in the summer and more again, breaking out through the old highs from July of this year. They were in around $76.38 at the moment. We're a couple of dollars above that. So as usual in this video, I'll talk about the reason for the move, what sort of forecasts, targets people are looking at, the levels to watch. Then we'll come back onto the chart and do a trade. And I think it's time to start going with the trend. Again, the only question is whether to buy up here or wait for a pullback. Let me talk a bit about what's going on with oil, and we'll come back and look at things in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought, given the fact it's just moved to 7-year highs, that we should do an update on the price of oil. It's wrong-footed me. I didn't think we'd be up here, but we'll take a look at it in a second and see what the trade might be. So as usual, in this video, I'll talk about some of the recent news, why we've seen it driven out to these best levels since late 2014. And then we'll jump back onto the platform and take a look at the charts in a bit more detail, come up with some targets, some places for stop losses, and have a think about where it might go next and look to see if there's a trade. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different content throughout the week. Plus, of course, every Friday at 2:30 UK time, I now do a live stream direct from the YouTube channel. If you're subscribed with the alarm bell notification clicked, get a message off YouTube as we're about to go live. Right, let's get into it and take a look at crude oil in a bit more detail. So the price of oil continues its strong performance for 2021. So at the time of recording, the price is up about 62% year to date. An incredible move, of course. If we cast our mind back to April of last year, the cash price was trading around $11. The May contract famously went negative. And here we are up almost $80 a barrel for oil. So where it's got to this week means we're touching a 7-year high. So we've got to go back to October 2014 to see the price of oil this high. But what's been the catalyst this week? What's pushed it higher? I think the latest catalyst has been a decision by the oil-producing group of nations, OPEC Plus, to resist increasing supply at a faster rate than they've already said. So supply is increasing. Some thought that perhaps in the OPEC meeting this week, they'd open the taps even further, but they've said no, they're going to stay where they are. So the company, OPEC, is going to stick to its plan of increasing supply by 400,000 barrels per day in November. So the latest move means we're seeing people scrabbling around, upgrading their forecasts. Goldman Sachs, for example, has upgraded its year-end forecast for oil to $90 a barrel, which is only about, $12 above where we are now, about 15% higher than where we are now. So this move out to its best levels since October 2014, it's a classic breakout from a chart point of view. Is this the start of a move to $100 a barrel? Is that the next objective? We'll take a look at the charts in a second. First of all, let me talk about the levels to watch. So I think on the upside, the immediate hurdle, perhaps psychological, is $80. I think the major level from the charts is actually the high from October in 2014, and that comes in at $91.50 for oil. So that could be a hurdle if it ends up getting that high. On the downside, lots of support levels left. For me, a cluster of support around $73 to $75 a barrel, that sort of area. We might use that for a trade. So as usual, to put some color on these numbers, let's jump on the charts and see if there's a trade to do in oil. So let's catch up with our oil chart. We'd had, I think, a bit of a trickier time in July and August, and it did make me wonder whether that trend off the April lows was over. And did a couple of shorts on oil during the summer. They ended up being wrong. That, of course, is what stop losses are for, to manage the risk. We saw the price of oil at the end of August trade down to its worst levels since the end of May. So we saw, what was that, a 3-month low in August. But you can see the turnaround since then. You know, we've gone up, pushed out through the July highs. They were in around $76.40, that sort of area. The price so far, at least, has pushed as high as $79.50. So to put this into some historical perspective, let's just take a step out here. So I flipped this over to a weekly chart so you can see where we are. So we're back to October, November levels from 2014. And you can see back then, you know, we'd seen a pretty steep decline from June of that year, from about $109 a barrel in June 2014 down towards sort of 80 area by October. And this is pretty much where we are at the moment. There are some hurdles on the way up. You know, I think we're looking at psychological levels like $80, $85 and $90 from here, but we can't deny, or I can't deny, what the trend is. So let's go back to a daily chart and look at things in more detail and plan a trade. So we'll come back to the price action and the trend in a second. Well, let's look at the RSI. Not surprisingly, given the move, the RSI is pretty overbought. I think it's the most overbought it's been. It's only one more time this year it was more overbought, and that was in February of this year. Saying that, back then the price did carry on higher. So as I often say, just because we've got a high reading on the RSI doesn't mean the market is necessarily going to just sell off. So I think we need to bear that in mind, that perhaps we could see something of a correction from here, but not use it as a reason to go against the trend. Let's take a look at that trend. So I initially thought that trend was in trouble in August. We've fallen out the trend line. The trend line has done a great job since April of last year. But with the move out to 7-year highs, you know, we need to redraw that trend line. We've still got major higher highs. So let's just pick that trend line and move it. So our new trend in oil perhaps looks something like this. But the bit I want to focus on for the trade is what's been going on since August. So let's flip this over to an hourly chart and set the trade up. So if we pick this up off the August lows, around $62 a barrel, here's our trend. At the moment, we've got the trend line coming in around, $73.20. We have those old lows from the end of September around $73.40. So for me, I want to trade with the trend. You know, we've broken out to a 7-year high. It's a market that's shown strength. So for me, I'd like to be a buyer within that trend, but perhaps I want to wait and see if there's a bit of a sell-off. You know, just because a market breaks out up or down doesn't necessarily mean it's going to continue that way in a straight line. So what I'm going to do is leave an order to buy, and I'll leave an order to buy if we push back to where we were right at the beginning of the month. So let's say we push back to $74. That sort of area, I'd like to be a buyer. So about $4 below where we are now. Perhaps, what's that? About 5% lower than where we are now in oil. I'll leave my order in to buy at 74. And for a stop loss, I give the market a bit of a room because it could be a bit of a major break. This one, the closest I'd want my stop, you know, really tight would be underneath that end of September low, around $73. Giving it a bit more room is perhaps down here, below the low from the 21st of September, coming in around $69.30. So what I'll do, I'll put my stop at, let's say $68.50. So I'm going to be a buyer at 74 with a stop in at $68.50, trying to jump onto this trend. Let's set that trade up. Then we'll go back and look at the charts in a bit more detail. So I'm ready to go. The price at the moment is $78.29. I'm leaving an order to buy 62 barrels if the price drops to 74. You can see it there on the chart. If that order gets filled and I end up buying at 74, put a stop loss in at $68.50. And that's for the normal risk of around £250, which is the usual risk we place on these trades. That's it, I'm ready to go. Let's place the limit order. So that will sit there now, that order to buy 62 at 74. If the market drops back to 74, that order will get filled. Let's jump back to the charts. So here's that trend I drew on the hourly chart, on the daily chart now. And you can see there is a lot of support if the market starts selling off from here. The old breakout levels around $76. These lows here coming in around $73, the low right from the end of September. So for me, it is probably only if it breaks back below $69 does it start to look as if this is a false breakout. So it's been a really, really bullish move. It's been a strong market over the last month. Perhaps it is ripe for something of a correction from here, but assuming that sort of 69 to 73 holds, this trend still looks strong. For me, the next target is a move to 80, 85. That sort of zone. We'll come back to it over the course of the next couple of weeks and do an update. But a bullish break by oil over the last few days. And you can't really argue with that sort of trend with a market that's just touched 7-year highs. That's it for the update. Incredibly strong. I wonder what will happen, whether we'll get something of a pullback here. We'll come back to it, of course, in the weeks ahead. We'll look at it on the live stream. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.